Got my Friend.tech phone out, my regular phone. I was against Friend.tech from the start because I just felt like, I don't know, I don't like to attach my identity to too many things in crypto. I mean, I'm KYC'd, I pay my taxes, but I don't know. I'm always kind of weirded out about letting something have permission to access my Twitter and then connecting a phone number to anything. Anyway, before we get started, as a reminder, nothing that I say in the stream is financial advice, strictly for entertainment purposes only. We're going to try to keep it as entertaining as possible. The market always offers something to laugh at, offers us some kind of material. Yeah, this market's it's a joke more often than not. One of the first things that is coming up is after the close tomorrow, and that is NVIDIA earnings. Last earnings were a very significant beat. I forgot how much NVIDIA had jumped, but I should remember because I actually bought calls into earnings, and that was my best trade this year in terms of money, at least. It's important because we'll see whether or not the AI narrative actually has any substance, or right now at least has legs. You know, I've said many times before, I think AI is going to offer one of the most significant bubbles in history, but we haven't seen that yet. I think we're really early to that, honestly. I think you're too early to that. So you could be too early, you could be too late. And I think that we're very early to that. I don't think it's the kind of early where if you just buy something now, it's a guaranteed win. Chances are that it just goes through the same Gardner Heights cycle that we've seen crypto go through before, where there's like a ton of promise and speculation about what is to come based on, you know, this promising new technology. And then people realize that the tech isn't catching up to the hype. You know, there is a lot of wind that's let out of that. And then finally you start to see some building and some things come to market that actually have substance. And then we see, you know, who the clear winners are and who's actually running in the race. The point is, I think that we've seen a lot of that priced in, and there's not really a whole lot to show for it yet. I mean, we have ChatGPT, we have some cool software when it comes to creating images. And I know there's obviously AI is going to transform the world. But the point is that I think a lot of things are inflated going into it. What are the chances that NVIDIA really beats on earnings tomorrow? Again, the same way they did the last earnings. This is something I think is worth paying attention to because NVIDIA has been responsible for a significant amount of the upside we've seen in indices, Microsoft as well. So we'll see how other stocks trade around NVIDIA's earnings. I think that'll be pretty telling. Another thing that's coming up this week is Jackson Hole. So Jackson Hole on Friday. Yeah, so August 25th, Powell speaks and the Jackson Hole Symposium is that day. So that is going to offer hopefully some insight into whether it is higher for longer or whether or not we have some kind of dovish Powell on the podium that day. And the reason I say that is because you can see the rates are moving up. I think macro is always relevant. So whether or not macro affects short-term price action is one thing. We've obviously seen that correlation abated for a little while. So if we just look at something like the NQ, and I've said many times before that I think crypto kind of trades like tech, there's been periods where the NQ has moved up, BTC has either drifted down or BTC has been drifting up. But there's been periods where there hasn't been that short-term correlation that sometimes you get. Right? Especially this was more prevalent when there was a lot more TradFi desks that were trading crypto. And now we've seen a lot of market makers have left and a lot of those TradFi sort of fast money types have left as well. So the enforcement of the correlation isn't really there as much as it used to be. But I think zooming out, there's no way that if the macro were to change, if the S&P were to continue to move down, especially if it moves down sharply, the NASDAQ as well, there's no way that BTC and ETH would not get harmed in the process. I think this is really important because, so if it's a dovish stance, that's great. If there's any talk about the target inflation number being higher, that would be good for BTC. But if macro changes, right, and we start to see that rates are moving up, the dollar's moving up, and equities and risk are starting to lose their footing, this will really matter, in my opinion, around the halving. A lot of people, myself included, they look at the halving as one of the strongest narratives in crypto, one of the ones that produces sort of the most significant flows that a lot of people outside this market are aware of as well. So you want this to happen in a really friendly environment for risk regardless. I'm not interested in trading on chain, trading 5K positions. That's great for people. If you have a small bankroll, that's phenomenal. I've seen that a lot of on-chain pairs, a lot of on-chain narratives, they trade really technically, so that's great. There is a larger amount of ways to execute now rather than just using Uniswap. And if you're someone who trades with a smaller bankroll, yeah, you could absolutely crush it trading on-chain. I'm personally not as interested. I think there's a lot of games that are played on chain. I think it's a lot of a couple people getting really good fills and then like 99% of people incurring the 90% drawdown. So I think there's a lot of pump and dumping going on by influencers. So much has changed, I feel like, in the last couple months in this market. The first thing that people could probably think of is like when Hasaka took the Rollbit deal, that shocked a lot of people. Rollbit was one of my bolder calls going on 2 months ago. During a bull market, there's this kind of feeling that anything goes. There's a line you don't want to cross. Like if you're a person who has over 100,000 followers, listen, it doesn't even actually matter if it's 100,000 followers, 50K followers. There are accounts that have 25,000 followers, but all of their followers have them on alerts and all of them are following them over the edge. They're just like absolute lemmings. So if they say jump, people jump. But there is sort of this like kind of unspoken code that you don't share below a certain market cap coin, but people are sharing, like no joke. I feel like wherever I look, there are large accounts sharing things that are like 250K, 500K liquidity, sub 1 million market cap. And they're sharing them and saying, they're like applauding the performance of the coin after they share it. And it's like, a fucking course it's going to 2x. Like it takes 10 people to buy for it to 2x. So there's a lot of that. And then you have Friend.tech, which is basically like paid groups that everyone has. But anyway, I made a couple announcements in the last 2 months. I am on the Synquote team now. So I've shared this many times before. You could use the link trade Synquote, but I'm not just sharing a ref link for Synquote. I'm actually on the team. So if you look at Synquote's Twitter page, for example, they follow 11 people. They don't follow any influencers. I'm actually on the team. So if you ever have any questions about the platform, if there's any ideas that you have, if you ever have any issues, you could come to me. If you want to build some kind of position OTC, let me know as well. This is a decentralized options exchange that uses RFQ, request for quote. There are a lot of things coming with this in the next month that I can't get into right now, but it's a fucking awesome platform. The difference between this and trading with perps is that you cannot get liquidated. So you cannot get liquidated by buying a call or buying a put. So it allows you to have that directional exposure without the exposure to that path dependence that comes along with using leverage on a futures product. Path dependence meaning if you are 100x long something, you cannot have that move more than 1% beyond your entry point. So your maximum adverse excursion is limited. And obviously that'll increase depending on the leverage you use, but you might have the idea, right, that price is going to move up and to the right, but it moved too much up and down on the way there and you got liquidated. So by buying options, and you could sell options on this platform as well, there are just some perks that you can access by using futures products. Not only that, you're taking bets not just on, there's just a lot more ways to express yourself, let's put it that way, by using an option rather than a future. You could take non-directional bets on volatility, whether that's volatility increasing or decreasing. Obviously, people have been really getting away with selling options lately. You could, take directional bets, but sell options against that to finance that position. The number one decentralized options exchange right now, and the link is below if you guys want to sign up. Okay, so first things first, let's talk about BTC. This was larger than FTX in terms of open interest, in terms of liquidations, this move right here. Now, there was a significant amount of open interest in the market. It wasn't necessarily obvious in perps that the market was overheated, but when the market is assumed to have bottomed or is bottoming, you're going to see more long-term positions taken in products that are suitable for those kind of views. So rather than taking long-term positions in perps that have a degree of decay to them, if you want to take a long-term position, it makes sense to look at the quarterlies, for example. And you will see, obviously, that close as we get into expiration, but they will be trading at a premium. So you're going to be paying that premium versus buying the spot market, which will be either a lot or a little bit less. A lot of positioning looks to have built up in those products rather than perp. So if you look at, for example, this is just a 3-month annualized basis. You can see that that basis continued and price remained flat. So prices this is going from May to August, obviously continued upward, but there was a lot more sideways and drift downward than as indicated by futures basis. So this was just showing you that the market was continuing to trade at a premium further and further, even though price wasn't reflecting that. So that positioning was accumulating. And I think that the market tends to let go of positions due to boredom. So you have a lot of positioning that built up for a good reason, I think, right? Long-term views based on ETF coming to market, which gives traditional traditional players better access to this market versus buying like ETPs or CME futures that trade again at a premium and are thin. So because you're trading something that's at a premium, you're buying a futures product, you have to pay that roll yield, which is going to mean you have to buy up the curve, right? So in a market that's trading contango, you're going to be paying that difference over time, right? You're going to be incurring that roll yield. So meaning for long-term views on this market, it's not a whole lot there for you. And also the ETF gives credibility to this market, right? If BlackRock has an ETF, like that's a big fuck you to anyone who ever had an opinion about crypto being, or BTC at least being, significant or at least relevant or legitimate. So a lot of that positioning, I think, was stale, was late, people buying too high. Anyone who had accumulated that position probably doesn't have the strongest hands. And you see these flushes occur after very imbalanced moves. So where we are now, we're at the yearly VWAP. So it's just an idea of like where risk average out for this entire year to date. For the last 2 quarters, like going back to April, we haven't really done anything. We traded right back through last quarter's value area, right? So the last that's going back June, May, April. So 3 months. These are 3-month period profiles. And we're at that yearly VWAP. We're sort of at the lows of this, and just kind of stressing we're at the lows. We're at a key level. It's a dynamic level. It's a VWAP, right? So this must be a great area to buy because, it is also on the back of an extreme amount of liquidations, a big flush in OI. Like these are actually all things that I would really consider to get in position. I talk about this often, like multiples, volume, big changes in positioning, right? Large imbalance moves into key levels from a distance, yada, 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 sort of setting up the perfect support buying opportunity. If we look at Binance, we did take out the low. If we look at the spot markets, we didn't. But nevertheless, we are still sitting at, we're back at sort of range lows and retesting this prior range high. Loosely though, right? It's a zone. So it has all the characteristics of something that would really normally, I would just be like, yeah, absolutely, I'm going to buy this. If it wasn't for the fact that macro hasn't necessarily looked great. Equities have been experiencing a good amount of pain up to this point as well. Volatility was really compressed. Like this was I think the most compressed, the lowest volatility had been, if you look at like DVOL or historic volatility, it's, if not the lowest, if it's one of the lowest periods of all time in BTC's history. So normally after something like this, when you do get an expansion, if it's either trend changing or it is trend starting. So whether it's a reversal or it's a beginning, for me at least, and again, I know a lot of people are buying this dip and kudos to them if it works out. A lot of the times, in my opinion, when something happens like this and you have like a day like this that is a record day, yeah, there are plenty of times when it's a great dip buying opportunity. But for me, it's more important that it's coming off of this kind of compression. It's not like it was a brief period of time had passed and then we had a violent plunge below a low and then the market has, wiped out of the adequate amount of longs that we would look for continuation. This to me is possibly signaling the beginning of a larger trend change. And again, it's at a key level. I just think that it's more likely now that we come out and fill out these lower prices. One of the things that I would look for though, honestly, is we have this single print gap. So we have this sort of imbalance move untested around 26.9, 27 region. Could the market come back and trade to this level and then continue down? Yeah, absolutely. So this is kind of a level where I'm paying attention to. If we accept above 26.9, 27, and we start to sort of gather our footing there, then yeah, I'll play some kind of gap fill to the other side of that region. So to the other side of the level that we came from. So right around 28.5, 28.6. I already closed out my short. So I was short from up here. In my opinion, this is more likely to continue down, right? So if we do pop up into this gap, I think this is more likely going to be the cutoff point and would offer sort of another rally to sell. But if I was going to bet on what happens in the near future and bet on it just verbally, not actually take a trade around it, I think this is more likely to kind of drift sideways and then continue to put in another leg. Wicks like this don't often get left behind. So example back here, this kind of, large plunge. People look at wicks like this and then think that this is a really good sign of demand. Really, it's just a really thin imbalance move. So we covered a gap, blew out a bunch of longs, and more often than not, this just does fill out. What that means is we kind of retest at least 25 again, and then we'll see if we get a response around there. This is not a really strong belief of mine. I'm not taking a position around this. I just think it's more likely to happen. That wick is something that we'll probably fill out. And this high time frame rejection at this weekly level, looking at the monthly right now, I think that yeah, we are going to trade lower towards 20. Honestly, the next area that I would look to for a major response would probably be around this 23 region. So that is one of the highest volume regions within this entire structure. So if we go back to like last year and we go back to sort of the beginning of that initial range that we formed, and now we've been retesting, and now we're retesting for a second time. This is the sort of period profile for all of this. That's one of our high volume regions. We have a low volume area that we're kind of hanging out between right now. So it makes sense to kind of fill this out a little bit more. We have a little bit of a shelf and ledge between, 21.8, 21.9. And then if we start accepting below 22, start accepting back down towards these lows, I think it's possible that we actually fill this structure out again. Without a COVID-like catalyst, I think it would be really tough to, but I'm definitely not saying that it can't happen. So there's a lot of people right now that say that things like that can't happen. But I think that honestly, we're more likely to see 25 again, and then we'll see what kind of response we get there. And that is, for me, that is kind of the make or break zone. What happens again at 25? The reason that is because we have this high time frame level that was significant almost for a year in terms of acting like resistance. We flipped it, retested it. Now again, testing it for a second time really violently. But that was a prior range high to a much larger carve out. So I got rid of that. But yeah, over time, I think that when you accept back into these ranges, it takes some time, but you more often than not retest the more significant levels within them. But in the short term, listen, I'm not really focused on BTC at all lately. I think that this thing had a big move, but it's just falling right back into sort of this low volatility compression. And then something like, honestly, because of this compression, so you have, if you look at the last couple of days, you have a pretty tight balanced area forming. So we have value overlap, value overlap, value overlap going on. This is going on 4 days. We have no inside days, but this is tight enough to just bracket. I could even see this being taken. I mean, if you really want to take a BTC trade, which to me just doesn't look that exciting right now. Honestly, just these highs and lows as a trigger probably work. So something like this, breaking above 26.2, remaining bid, and then playing that towards this 26.8 region. So, 26.2, 26.3, breaking outside of this 4-day value composite, remaining bid, and then seeing something squirt up there, and then looking to this level for either bull or bear control. So either you see some kind of absorption up here, or longs get trapped through that pocket, or if we just see that this continues to remain bid, or, if we continue to drift into this low, because again, this is a really clean composite, I could see this offering some kind of breakdown short into this gap. So back down again towards 25. It is risky, right, to short into this, but yeah, I think that we're going to get lower prices anyway. I think this move was significant in terms of open interest and positioning, but I don't think it's the kind that just really mean reverts and does like a V reversal. I think things like this tend to have a couple days of chop, and then we see another leg. So price is holding firmly here. If we look at something like just order book depth on the spot market, for example. So we look at the Binance spot market. If we look at Coinbase, it's kind of the same thing. So there is a good amount of strength there in terms of a spot bid, but that doesn't necessarily mean that we can't continue to move lower, because you can see periods where you've had that before regardless, and price continue to dip down. But this does look strong right here. So yeah, I mean, it's tough. I definitely wouldn't want to get into any positions right here unless we see a big change in legacy markets where, they continue to bound upward and, the risk environment is supportive. Yeah, so Friend.tech. I mean, listen, cool concept, really clunky platform. I know you can't expect too much at the first iteration of something. There's definitely better ways to do it. I think that you're going to see that, or attempts at that at least, be made where competitors will come out. It's tough because first mover has an advantage a lot of times in this market, but it is clunky as it is right now. I think it's dangerous, honestly, because it is basically turning influencers into securities. And the way they get their price to go up is what looks like, for the most part, people are just giving their chats financial advice, very specific financial advice too, because that's a difference. That's one of the more important distinctions. Like if you have a newsletter, you can't necessarily get in trouble for sharing your stock ideas because it's not specific to one person, right? You're sending it out to 1,000 people. Whereas the chat, even though you could see as the person who has the token, as the person who's being traded, you could see everybody's question. They can't see everybody else's. So you're technically talking to individuals, and you're, for the most part, people just using it as a paid group, right? Sharing trading ideas, sharing market opinions and insights. I think that that's just really, I don't know. That seems like a, dangerous line to walk. Do I see a bunch of celebrities getting behind it? I mean, they would hire a team, obviously, to respond to messages. But as it is right now, I made a decent amount of money from it. So in a day and a half, I made $3,500 in fees, but I donated mine to the Maui relief. I don't want any part of that money. I don't want any part of the SEC. Do I think the next bull market will be weaker? No, I just think it'll be different. The expectation that BTC is gonna, I don't think there's actually this expectation, because I think most people are pretty reasonable in that they know BTC isn't gonna return like it used to. I think maybe a 2-3x is reasonable, but I think it's even dangerous to just assume that you're guaranteed continuation of this pattern. Again, that's why I say macro is important. I could basically see this happening. Oh, look, the low is holding. It's a strong sign of demand, big wipe in OI, all of that. Same dump down to this level. Oh, this level's holding. And then we end up spiking that like that. Not nearly the same amount of wipe in OI, obviously, but a big wipe nevertheless. I think you have to have your guard up for something similar, honestly. Like the level looking like it's good, but again, this was this really low volatility chop, a move after that. It's like just the concept of, after you have a range that's formed for a really long time and price expands outside of that, like you should never really fade the first leg. I get that it's complicated though, because the first leg is a leg that is a ridiculous shift in positioning in terms of OI and liquidations. And then it's also into, what should reasonably be high time frame support. This one, I'm just going to sit out though. I'm not going to buy this dip right here. I'd much rather buy into strong markets and rising markets. And this is just showing weakness. But yeah, I'm probably going to tie this up, guys. That'll be it though, guys. I got to pee. I appreciate you guys for turning out. I'm going to be back on this consistently right after Labor Day. So we'll get back to at least doing 2 days a week. And yeah, be sure to check out those links below. Check out Synquote, because in the next, again, I won't reveal what's coming out, but there's some really useful tools on this. Keep an eye on this platform. All right, guys, that'll be it. Enjoy the rest of your evening. Thanks for tuning out, and enjoy the rest of the summer.